afternoon. This week I spoke to the former chief scientist Alan Finkel about the authorship of his latest quarterly essay titled Getting to Zero, Australia's Energy Transition. Dr Finkel has quite an optimistic outlook on the energy future. He says the government's technology-focused policy has the nation on the right track, but there needs to be more investment in technology and infrastructure to further reduce greenhouse gas emissions.
When oil came in and enabled transport, it didn't displace coal, it added. When natural gas came in to do building, heating and electricity generation, it didn't displace oil or coal, it added. We are using fossil fuels for energy to drive our civilization, and that's critically important. But it's like a good medicine, there's sometimes side effects, and the side effect in this case is carbon dioxide. So we have to do something significant about that. And the answer there is renewable or zero emission sources.
Let's bring in Brian O'Callaghan now of the Oxford University's Economic Recovery Project. Thank you very much for your time, Brian. You've looked at some analysis comparing green stimulus spending around the world. What have you found in relation to Australia?
Yeah, good day, Kieran. Good to be with you. Thanks for having me. You're right. At Oxford, we've been working with the United Nations Environment Programme, as well as a number of other UN entities and the IMF, to try to understand exactly how green or environmentally friendly different stimulus spending has been around the world. Overall, we see that recovery type spending, which is that designed exactly to stimulate the economy, so not the JobKeeper type stuff that keeps us going right here, right now, but the stimulus to get the recovery going. Globally, the average is about 18%, which is good for the environment. In Australia, unfortunately, that's only down to 2%.
Yeah, so some of the comparisons are interesting reading through your analysis. It says Australia spent $2 billion on green policies, the likes of $54 billion in South Korea, though, $47 billion in Germany, $24 billion in Japan. So it is quite a contrast.
Yeah, that's right. And I mean, what's surprising here is Australia has such a deep natural competitive advantage in these different green industries, based on our rich renewable resource endowment, etc. And what we need to understand is when the government's talking about a technology roadmap, that's absolutely essential, but it's not sufficient. This is not a level playing field. When you have those international governments investing in such a mammoth way into these industries, we risk falling behind, foregoing that natural competitive advantage.
Dr Finkel did point that out in his quarterly essay that a target or a roadmap in and of itself doesn't happen in a vacuum. It happens in the context of a framework of policies, taxes, and so on. What needs to be done better here then to maximise those strengths you speak of?
Yeah, that's right. I think what we need here are targeted incentive measures, whether that comes on the tax side or whether it's through targeted spending to try and help catalyze some of the very rich private sector ecosystems that already exist here. So when we're talking about hydrogen, for example, and I know that Dr. Finkel is a fan of hydrogen, rightly so, it's certainly a part of Australia's future. I imagine a future in which Australia could be one of the centres for global hydrogen trade. That means we could have the likes of, the Chevrons, the BPs, the Saudi Aramcos of the world with headquarters here. But there are others out there trying to do the same thing. When you have Germany spending 10.5 billion on hydrogen just in the last year, compared to Australia's 280 million, something's out of whack.
Brian, have you got any thoughts on the argument that's made that the green energy solutions and sources will sacrifice jobs, essentially? What's your view on that in the context of traditional energy sources?
Right, so this is a good question, and it's an unfortunate misnomer. Perhaps that was the case, 2 decades ago when green investment meant R&D. But that's not the case anymore. Now we're talking about boots on the ground. Last year, I worked with Nobel Prize winner Joseph Stiglitz, as well as Professor Nick Stern and various others, to try to understand what the economic characteristics of green spending look like. We conducted a survey of leading global economists around the world, over 220 of them, talking central bank governors, finance ministers, etc. And the overwhelming perspective was there is a subset of policies that both win on climate and win on economics. Further modeling suggests that you can actually find, and particularly in comparison to traditional energy measures, you can find higher job returns in the short term, which is exactly what we need here as we try to recover from this pandemic, as well as enabling much higher long-term growth. Because what you're doing is you're investing in the future. You're investing in future industries as opposed to just supporting those that have been around for a while. And whenever you're investing in something new, that's where the real value comes in.
And I guess in the context of that, we look to things like clean steel made from hydrogen, with hydrogen as the energy source, and that sort of prospect, which would be potentially a huge one for Australia, green steel, green aluminium. But what about the United States? This shift, I'm looking at your chart in your analysis, it's really interesting. Now the US is back on the potential to act side as opposed to the negative side. It's been such a massive shift in the US policy and international position since that election.
Yeah, that's exactly right. I think we can't overstate how much of a game changer the Biden administration is to the future of green technology, both in the US and around the world. Because again, Australia doesn't, as Dr. Finkel says, we don't operate in a vacuum, right? We're part of this global market. And if the US is spending big in these emerging areas, that's good for us in some ways because it brings costs down for us. But it also creates a little bit more of a competitive dynamic in a market that we're competing in. So you can't overstate the importance of the recent change in administration in the US. There are positive signs coming forward with the proposed infrastructure bill. Overall size is mammoth by any comparison. We'll see what happens there. But regardless, as you say, the direction has certainly been a shift. And hopefully we here in Australia can acknowledge that and work alongside our close partners in meeting those future industries and positioning ourselves for future economy.
Brian O'Callaghan from Oxford University's Economic Recovery Project. Thank you for your time and your analysis. Appreciate it.